Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's going on in investment markets and what to look out for in the days and weeks ahead. Now, this week is one of those mega weeks. There's so much happening in this week that what you want to do as an investor is almost sit back, do nothing and just watch, which is exactly what I'm doing with my 80-20 investor portfolio. Usually about this time of the month, I will have a look at the performance and just review things, but I'm just taking a back seat, waiting for volatility in markets to calm down. And the reason that we could even see more volatility in the days ahead, because there are three key events that are about to happen. So today, there's going to be the US Federal Reserve meeting, so they could make a decision on interest rates where they're not expected to do anything radical, but of course, the language that they use in those interest rate meetings could have an impact and move markets, particularly if they seem very hawkish. We've also got the ECB doing the same thing, so the European Central Bank later in the week. But of course, if we come back over to the UK, we've got the election, the general election tomorrow, and the polls seem to be narrowing over the lead that the Conservatives may have. No one seems to be certain, if you can ever be certain about a general election outcome, as to who might win. And of course, that means that there's been increasing positions being taken on the value of the pound, actually taking protection against the value of the pound tumbling in case we get a Labour win or a hung parliament. With such levels of uncertainty, don't be surprised if we see some wild moves in the value of the pound. Of course, the value of the pound has a massive impact on your portfolios. Now, the market has been pricing in a Conservative win. We know that because the pound has been rallying. So overall, a Conservative win is seen as potentially positive for the value of the pound. Of course, if we get a Labour win, a surprise Labour win, then expect the pound to tumble. But like all things, even if we get either of those outcomes, how the pound will react is never ever certain. That's why this week is a great week to sit back and watch how assets interact and how they perform after, for example, the general election. We don't know which outcome we're going to get or how the assets will actually definitely behave if we did get a surprise Labour win or if we got a Conservative win. Now, beyond currency moves, there will also be moves in other assets such as UK equities to keep an eye on after the general election result is announced, and of course how global equities will react to the news, because don't forget, Brexit is key to this election and it's having a bigger and bigger impact on global equities. Now, the other big event we've got this week is the US-China trade tariff deadline. And as it stands at the moment, the US is still set to impose new tariffs on Chinese goods at the end of the week. But of course, Donald Trump could just change his mind at the drop of a hat and delay them. Now, the market is expecting Donald Trump to do this. And in fact, China has come out and made noises to suggest that that is exactly what America will do. They'll delay tariffs, not wanting to ratchet up trade war tensions. But of course, if the market has priced that in and it doesn't happen, then we could expect some really large scale moves towards the downside, because the market has been pricing in this narrative of a trade war truce, or certainly a phase one trade deal. Now, as the week's progressing, the market is becoming a little bit more nervous about the whole scenario and is trading in a fairly flat range, but it did rally up towards the all-time highs that we experienced in the last couple of weeks, and some of that was down to some positive news on jobs out of the US. But, as I say, if we get some negative headlines around the trade war, then we could see something pull back. We could see equity markets start to head southwards. What that means is, at the moment, there are quite a few issues out there that could move markets that we don't have any control over. So, as long-term investors trying to make a play based around whether the pound will rally or collapse, whether equity markets will rally or fall, particularly UK equities in the aftermath of the UK election, or whether the trade war will escalate, given that Trump has already started to try and escalate trade war tensions with various different other countries, including Argentina and Brazil in the last week. We have to see what happens there. So when I make next week's video, hopefully we'll have a lot more clarity over these three key issues that we're facing in the next few days. So that is it for this week on Damien's Midweek Markets. You can email me as ever at damien@moneytothemasses.com. You can contact me via Twitter, moneytothemasses with the number 2. And of course, we are on Instagram and Facebook. And don't forget to subscribe to our YouTube channel.